Hi there, I'm Barbara Turley and you're watching another episode of Feminine Wealth TV, the show that uncovers the diamond tips on creating truly conscious wealth from change makers, world shakers and wealth creators. Let me ask you a question. Would you consider a designer handbag an asset? That it could be an investment? Do you find economics unbelievably boring and making decisions about your financial life and your business? Well, I'm joined today by a woman who's going to change all of that for us. Author of the new book, Signals, and former advisor to the White House in the US. Please welcome to the show, Dr. Pippa Malmgren.
Hello.
Pippa, welcome to the show.
Thank you.
So tell me, first of all, it's such a pleasure to have a woman of your position on this show who runs her own business and also advises some of the largest investors in the world. So I'm really excited to have you here today.
Thank you.
And to try and debunk all these myths we have about economics and money and how it's so boring. So first of all, tell me, what drew you to the whole financial industry, like way back in the beginnings of your career?
Well, I was very lucky. I grew up with a father who served 4 presidents, so I was very exposed to what the world economy really is. You know, stories at the dinner table about auto parts and textiles and steel seemed perfectly normal and interesting to me. And then when I got into the markets, I realized this is the juice. This is where the action is. And if you understand that, wow, what a incredible power you have in the world.
Yeah, I mean, I feel that way too, because I started out in a trading role in investment banks as well. So I loved being at the coalface there, and I find it really interesting. And you're right, once you learn that, the world's your oyster kind of thing.
Well, that's the thing, you know, we both worked on trading floors. I was the chief currency strategist for one of the world's biggest investment banks. It's a very masculine environment. It's a very brutal, tough environment. And yet it is where you really learn how things work. And what I discovered is that traders and policymakers alike like to think about these things in very complicated ways, but actually it's pretty simple. And a regular person can understand what's happening in the world economy if you stop trying to explain it purely in math, models, algorithms, and instead you use practical everyday examples, which is what I like to do.
Yeah, great. And I think, you know, a lot of what I've been talking to a lot of women about recently is that the industry is very masculine paradigm. Money, business, investing, very masculine energy run things. And it's lovely to see kind of the more feminine energies coming in, which is stories, intuition, creation, all these sorts of things, collaboration. So tell us a little bit. So what prompted the book? Where's the book come from?
So I, in May 2007, I sold my personal home, moved my family into rental accommodation. I recommended to all my clients to sell every asset they owned. And everybody basically said, I think you need to take a vacation. And then we had this huge crisis.
I remember that. I remember you telling people that. Yeah, I do, yeah.
So I decided, gosh, I need to actually explain to people so they can see these things themselves. You know, it's hard when the bank manager tells you, well, your property will be worth another $500,000 in 6 months.
I know.
And my view is like, do you really think that without even a single coat of paint, it's going to be worth that much more? Don't you think that signals something is wrong? So I decided to write a book about how economic signals are everywhere. They're around you all the time. If you just open your eyes, you don't have to read the Financial Times. You don't have to be a financial expert or have a PhD in economics. And regular, everyday people, once they begin to understand what a signal really is, start to see them. And so I'd love to talk to you about the signals I see today.
Yeah, I'd love to. And what I just love about that is that you're making this whole thing of people get bamboozled by the financial industry. People say to me, should I buy a house? I don't know. Am I missing the boat? And I always say, I think that's the wrong question to be asking. So tell me, some of the signals that we can be really looking out for that will help in our financial decisions. Okay,
so let's understand the broad landscape is most of the industrialized countries like Australia, the United States, have a historic debt problem. And that's why all the central banks are doing something called quantitative easing that nobody really understands what it is. In plain English, it means they are trying to create inflation. When governments want to create inflation, usually they succeed. But they don't tell you this is what's coming. So when you look around, what do you see? Beef prices are at an all-time record high. So when you go to a restaurant, you order a steak. Have you noticed how the size of the steaks on the menu is getting smaller? In the U.S., they're down to as small as 6 ounces, which in the old days used to be considered an hors d'oeuvre. But the thing is, it's more expensive per weight. Or the can of Coke is 3/4 the width, 3/4 the height that it used to be. So you're paying more per weight. Companies that make things like baby powder. They make the size of the aperture larger so you use it faster, and weight the bottom of the bottle so it feels as heavy as it used to. But what's really happening in this kind of shrinkflation is it's reflecting the efforts of central banks to raise asset prices, and that means property, that means food, right? Because the value of farmland property in the U.S. hits all-time record highs, then the cost of producing on it goes up as well, and so the state gets more expensive. And you can see it in many things. The example I like best, I really like using examples that are not from masculine industries, because we know about those. So this morning I put up on Twitter an example that an Hermes handbag has gone up 60% in a decade in the initial value. That's not even the value that it keeps. And a pair of Manolo Blahnik shoes are up 48% in a decade. So that's an inflationary change. Now, there are things that are still falling in price, so it's important to understand
computers and tech and stuff like that, because that's really hard. I think that's where people find it difficult to understand these things and why this is a problem.
Exactly. So let me jump a little bit. When food and energy prices are rising or high, this really hits the emerging markets very hard, because their workers spend 40 to 70% of their income on that stuff.
And the emerging markets would be like China, India, Bangladesh.
So in all those markets, the workers are asking for much higher wages. And that means the cost of, for example, the clothing that you might get at H&M is going up. And in fact, they're less and less competitive because they're more and more costly. So manufacturing of clothing is moving back to Britain and the United States and Western Europe, which is just mind-boggling to some people, but it's a massive change. And that, of course, means that the old really inexpensive deals we used to get, you know, when you went into H&M, it's not quite as inexpensive as it used to be, is what I find now.
And then tell me, so this is causing, I mean, it sounds like these are tectonic shifts, right, globally, in terms of, and there's people out there running businesses that are going to be extremely affected by these things, and if they're not looking out for these signals and knowing what these signals mean, they can make wrong business decisions.
Correct. So let me give a couple of examples of that. Again, understand the purpose of this thing they call quantitative easing is basically to make it so painful for you to keep cash in the bank where you're losing money because you don't get paid any interest, and to compel you, to forces you out of to put it into something risky. And so naturally people go, well, it makes more sense to own property. And property starts to hit record all-time highs. Also investment strategies, right? That's why we have record mergers and acquisitions going on, record initial public offerings and things. So now we have an environment where everybody who really understands their business is saying, the valuation the market is giving my business is way too high. I can't possibly generate the cash flow that these numbers assume. And so they're beginning to get scared and hold back. And the question is, should you stay in or should you pull out? So
like if somebody's bidding for your company, like there are a few, I've had a few women on the show actually who have bids around for their companies, and they're crazy bids, right?
Oh, geez, the other day, is it Jessica Alba in California who has like a baby food company? The initial valuation on her IPO was like
through the roof,
$70 million, you know, in
yours.
Yes. And so everybody goes, well, because that really makes sense. And so this is an issue we really have to think about. Let's put it really simply. You have to ask yourself, how much of the value of the asset that I'm controlling, if it's my own business or my own balance sheet, how much is a function of my hard work, and how much is a function of free money in the world economy?
Cheap money floating around the world.
That's right. And so that's one question. A second question is, what is my capacity to outrun rising costs? If costs are going to rise, then I'm going to have margin pressure, right? That's why, you know, candy bars are getting smaller, right? Because the price of the chocolate, the cocoa beans goes up. The only way they can save themselves is to charge you the same amount and make it smaller.
Clothing's getting less, the quality's falling.
The quality's falling, exactly. So
shrinks in the wash.
Indeed, it's another version of shrinkflation.
You have to buy another one.
That's right. So this is another question you have to ask yourself. What's your personal capacity to stay in front of a rising cost base? So this is interesting, where Warren Buffett says, you know, some people like to buy gold when inflation starts. And he says, actually, that's crazy. The most useful, valuable thing you can do is invest in yourself, in your own personal skill set, so that you can command a higher income going forward. So that's really the question you should be asking yourself. What do I need to do to stay in front, to raise my value and stay in front of a rising grocery bill?
Yeah, that's fascinating. And actually, and I'm going to digress slightly on this topic, because this is a really interesting one, because women, and this is a generalization, but as we know, as women, we get paid less than men. We tend to value ourselves less than men. And as women, I think it's really important for us to understand that point and go, it is so important to value what it is that you bring to the world in a business, for example.
Yes,
and to price it properly.
That's the thing. How do you price yourself properly?
Yeah. How do you price yourself
properly?
That's
it's a very interesting
question.
It's funny when they've done studies, guys are very quick to say, you should pay me more.
Yeah.
And women are always like, well, if I'm going to do a really great job.
Yeah, they may want to do the great job first.
Pay me, that'll come later.
Yeah.
Yeah, that doesn't really actually work.
So in this context, though, then, this could mean that as women, if we are underpricing, which is a major problem in businesses out there, we are actually we're doing ourselves a disservice, but we're also ruining our ability to create wealth.
We become more endangered as inflation goes up.
Yeah.
And inflation definitely always hits the poor and the savers, right? Because inflation basically is a tax. Some people would call it much worse. They would call it an expropriation or a confiscation of your assets. Yeah. But it's kind of like the money's coming out of your back pocket and you're not noticing that this is happening. So the lower down you are on the income pole, the harder you'll be hit by this phenomena. And that's why I think it's important to start thinking about the social consequences, the impacts on families. So, for example, I'm giving a lecture at the Royal Society of Medicine about when you have record high protein prices, people get pushed into cheaper calories. Right? You start buying cheaper calories at the store. But all the cheaper calories are also emptier calories.
And bad for you.
Very bad for you. So we're seeing the population in the industrialized world starting to split between the wealthy who can afford the best and the poorer whose health will deteriorate. Their longevity of life will be less. And in fact, they're becoming more obese because these emptier calories are basically sugar.
And they're becoming mentally and emotionally more unstable.
It's all bad. It's all bad. So these are things I think, as women, we're very conscious of what is happening to the structure of the society that we live in.
Yeah.
And it may be that the only way out of the debt problem is to go down an inflationary road, but I think we should be cognizant of the consequences.
And also, because another topic one of my missions, as I was talking to you off air, is to get women to really think differently about this money thing and to really embrace money, embrace investing, like the saver thing we talked about earlier. If you're going to stay a saver and just hoarding money all the time, you're actually not going to get ahead in this kind of world.
Not in the current environment where the central bank is going to penalize you for holding cash and saving. So you really need to think about what are good stores of wealth. And one of the most difficult things with investing is you have to do something different from everybody else, from the market. Because by definition, by the time everybody starts saying, property is a great investment, it's too late, right?
Yeah, just like now in Sydney, we have property prices through the roof and everybody's jumping in. Yeah. And it's just too late. Yeah.
So one of the things that one has to learn how to do is to hold a different view and be comfortable with that. The other thing, too, is that the measure of success in investing is not about what you buy. It's about what you sell. Because you can buy an asset that goes up in value and you can gloat about that and say, I bought this property in Sydney and I made a fortune. Yeah, but you did nothing until the cash is on the table in front of you. Yeah. So we should all focus on, what are we selling? What is our plan to sell? And
what's our exit strategy?
What's your exit strategy? And the way people lose huge fortunes is they set a plan in their mind for an investment target. They reach it, and instead of selling, they say, let's sit tight. Yeah. And then it falls.
And they assume they're wealthy.
And they assume they're wealthy.
Because this is the other mistake. Like, you're not really wealthy until, it's the selling thing. And it's the same with property. With property, I always say to people, your house is only worth what the next person is willing to pay you for it. I don't care what valuation you think it's worth. Until somebody puts a check in your hand, don't assume it's worth whatever it is, because tomorrow it could be worth 50% less.
Yeah.
And that's the reality.
Exactly. But another element of this that we should talk about is innovation.
Yes.
Because the one thing that gets us all out of both the debt problem and the funk and lets you manage or fix inflation is innovation.
Yeah.
And there's such extraordinary innovation going on in the world today. So
that's the good side of it, that's the good news,
and
to embrace this inflation.
It's very exciting.
This innovation.
So remember that 2/3 of the net new jobs in all industrialized economies are driven by companies that employ less than 50 people. Mm-hmm. So all the cool new drivers of growth and wealth is small business, right? Everybody always thinks of, you think of Steve Jobs at Apple, right? Mega corporation. We use all the equipment they produce. How did that start? At a kitchen table. In a garage. All great businesses begin this way. So this is a time we should be thinking about, what is the thing I can build that will be my protection against the future? And just because it's small doesn't mean it's risky these days. In fact, big businesses are full of risk.
Yeah, because they're less nimble.
Yeah. I mean, I have people who say, oh, well, should I work in a small business or take a less risky position with an investment bank? And I'm like, you think working in investment banking has no risk?
I know, it's so risky.
Yeah, it's very risky.
Yeah. And the other thing I wanted to talk about is this social impact thing, because I know as women in particular, and my audience is predominantly women, we love to give. And I know women are really bothered by what's going on in the world right now. We still have domestic violence against women, one of the greatest problems in society. We have girls being sold into sex slavery. We still have all these things going on. And I've been sort of saying to women, if you harness an asset like a business and you innovate and you value yourself properly and price it properly and build wealth through investments and build your own structures, the impact you can have in terms of supporting foundations and actually channeling some of that money towards the less off in a really beneficial way is massive.
Not only that, but the correlation between financial stress and the breakdown of marriages and families is huge. Yeah. So to protect your own life, you need to take greater control and make sure that your finances are in order. And then to be able to extend your graciousness to others who need it, you need to do this as well.
Yeah. Because you can serve in a much bigger way.
Much bigger way.
And you are looked after yourself.
Yeah, no question. I think part of the message in the book that I've written is that the answer to the question lies with the reader. Are you going to sit back and think, oh my goodness, tomorrow we're going to have a catastrophe, the economy will never recover, and therefore I'm not going to invest in the future or in myself or anything.
I'm just going to knuckle down.
I'm just going to pretend this isn't happening. Then we know what the outcome will be. If everybody says, actually, I have faith and belief in my own ability and in the future, and that the world economy always innovates its way out of difficulties, and we start to be part of that, then I think we'll have a much stronger world economy. Yeah. You see, that's the thing. The answer doesn't lie in Canberra or in Washington, D.C. or, in some wood-paneled room where a group of policymakers make a decision. Because I was one of those people.
Yeah, you've been in there.
I've been in there. So that's not where the answer is. The answer is with each individual and their willingness to engage in calculated risk-taking, to balance their hubris, their belief of I could do this, with their reasonable assessment of what is my actual capability. And if you can balance these two things and reach for something that's beyond your grasp but potentially within it, that's what creates GDP. That's what creates growth. That's what creates the future. And so I've written a book to try to encourage people to engage. And also because it's fun and it's interesting and it's cool, and I'm so tired of economics being associated with gray book covers. They're books written by, not middle-aged white guys, but older than that, with gray hair, writing in math, writing in formulas, and writing about boring things. And so I chose...
That nobody cares about.
And so I chose as the cover color for my book, hot pink.
I love it.
It's so funny. But, I'm like, how many hot pinks are there in the business section? Answer, there will be one.
And it will stand out.
And it's written by a woman, and I'm using a lot of feminine examples. I use examples of fashion magazine covers.
I love that about the... Tell me that story, because you have this thing where you say, what can nude models on the front page of a magazine or the front cover of a magazine tell us about the global economy and where things are going?
So this was in 2009. I think it was the August 2009 edition of British Vogue. And I saw a cover on a newsstand, because I'm always reading the fashion magazines, of course. And there is Natalia Vodanova, one of the world's most famous supermodels, wearing absolutely nothing.
Completely naked.
And I'm like, wait a minute, it's a fashion magazine showing no fashion. What does that mean? And what I concluded it meant was the fashion industry was in such disarray from the financial crisis. They no longer understood who is the customer, what size is the customer, how much money do they have to spend. Have you noticed,
and
for
what
example,
they want?
So for example, have you noticed there's no agreement on where the hemline should be?
Yeah,
We got maxi skirts, we got mini skirts, we're all over the shop. And no agreement on the silhouette either. Usually we all have a pretty clear idea of what the cool silhouette is. Why is there no agreement? Because nobody can figure out who is it I'm actually trying to appeal to, where is the money? Because before the financial crisis, it was young women who were receiving unsolicited credit cards in the mail and spending it on clothes. Today, that's no longer the case. And in fact, older women like myself, who are not so skinny,
You're looking pretty good.
not so skinny before, we have to be catered to. So what's interesting as a signal as well in the U.S., I don't know if you have it here in Australia, what used to be a size 14 is now called a 12.
To make us feel better
to make
about
you
us.
feel better.
Oh,
exactly. And to make you buy more.
Yeah. Well, a 10 is probably, a 10 or 12 is bigger. I reckon.
A 10 or 12 is bigger
I
than
reckon
it
you
used
fit
to
into
be.
a smaller,
Yeah. And that's why we have 000 now instead of 0, because it's all moved down the spectrum to accommodate the fact that the bulk of the buyers
are bigger.
And that's why, again, Natalia Vodanova was an interesting choice. She's the mother of 3 children. Now, you know, you can't exactly call her really curvy, but she is not skinny. She is not the heroin chic kind of model that the industry had been using up until the financial crisis. Post the financial crisis, they realized that actually everybody cares more about comfort. And so the curvier models, authenticity, the whole thing about using plus-size models has become much more mainstream. And so these are all signals about what is the condition of the economy.
So tell me, Pippa, the big burning question. In terms of investing, where should we be thinking about investing now? I know that's a global sort of question, but I've been teaching a lot of women around the global. I sort of say to women, if you can get your head around how money moves around the world between asset classes and how it works, it makes investing a lot easier. And when you put these signals on, it makes things a lot easier again. So what are you seeing out there in terms of the asset classes and investing world?
Yeah, so let me break it up a little bit. One aspect is financial investing. So that's how much is in bonds versus how much is in cash versus how much is in equities. Of those, I prefer equities because, again, free money makes them go up. And it's very complicated, but central banks are making sure that the bonds don't sell off. So you can't really make money on the upside, but you could lose money on the downside. So I don't like bonds very much. But equities, and because they can shrink the size of things, and because they can actually just raise prices.
They can innovate.
They can innovate and then find their way to profitability no matter what happens to the input costs. So that's one aspect. But another aspect is what you do with the investment in yourself. And I think it's very important that people take advantage of things. I don't know if you've heard about it here in Australia. Have you heard about Moocs? So they're the massive online courses. So you can now basically take a course in any subject that interests you that's offered by any Ivy League university in America, Stanford, Harvard, MIT, and that way improve your knowledge and your level of interest and your passion for things. And I think that investment in yourself is a very important aspect of investing generally. Another piece of the puzzle is your investments need to be different from your friends. So, for example, when I worked in financial markets like you, I realized my whole income is dependent on whether the stock market is up or down. Therefore,
so you don't want to be investing there.
I can't be invested in the stock market. So in those years, in the 80s and 90s, I invested most of my money in property. At the time, people weren't doing that. Later, that turned out to be a good strategy. But if you are involved, if you've inherited a property business,
invest in something else.
Invest in something else.
Do it, even a tech startup or something.
Diversify.
And
try to also be at the cutting edge of entrepreneurship and innovation, I think it's going to be less and less the case that all of us work for one company for our careers or for even long periods. People are going to have a portfolio of activities where you work as an advisor to a friend who's doing a startup, and you work as a consultant in some capacity to a big established business for a certain number of hours per week. And the more diversification you have in the business activities you're engaged in, the more knowledge you will also have, and the less risk, if any one of them goes
and
the
that
wrong
you can
way.
actually, you know, lots of different avenues to take.
And people.
And
people are important. You got to know who to call if things go wrong.
Your network is your net worth.
What's your network? And women are also very bad at networking.
Very bad
Men
at
are better
asking.
at it.
Yeah.
But it's important.
It's interesting that you brought up the investment in yourself thing, actually. And, you know, I will say that I didn't plant this in there, but I'm actually launching in 2 weeks' time, a thing called a training program for women entrepreneurs called Get Savvy Academy. And the entire program is basically geared towards getting women from this fear around money right through to creating businesses that are true assets and not just glorified jobs.
Yeah, absolutely.
Huge problem.
Trophy jobs.
Doing
this
all
is
your
no good.
everything
It has
yourself.
to actually be profitable.
It has to create its own income outside of you.
Definitely.
You know, you can work in it, and then when you get that pumping, it's the investing piece, and how do you actually make decisions around what you're investing in, and then protecting the whole thing, so you've got sustainable wealth for the future. So
fantastic.
It's great that you mentioned that, because I'm just on this mission to get this out there and go, you know, I want to lead that sort of vision of women doing that, and, you know, sort of be the leader of that. So that's
I think that's great. I mean, it is amazing that, I don't know, here in Australia, do they teach you in junior high school or high school about how a checkbook works?
No.
How compound interest works?
No, they don't.
You know,
people don't
credit
even know
card
interest rates.
fees,
How do
interest rates.
work?
It is incredible.
Do they teach it in America?
Not really.
Because I don't think they teach it in Ireland, where I'm from, either.
Not really.
No, they don't teach it anywhere.
And I mean,
so
what
should
other
be in the
core
schools.
building? I mean, it ought to be right next to sex education.
Yeah, well,
Really?
money is the last taboo, right? It's the last taboo outside of the sex education piece. Yeah. So, Pippa, if people want to connect with you, they want to find out about your book, and they want to, you know, connect with you online, where should they go? What have you got websites?
Well, the book is called Signals, and my company is called DRPM Group, as in Dr. Pippa Malmgren Group.
Okay.
It's my company.
I'll have that showing right here,
That'd
right
be
now.
great.
Yeah.
And so you can find the book on there. We're about to launch it. It will be up on Amazon eventually, probably in the next month or so.
Great.
I do a lot on social networking.
Yeah.
So I'm on Twitter under @DrPippaM.
Okay.
I had to do that because if I put Pippa M, everybody thought it was Pippa Middleton.
Different thing. Different topic.
Well, it's not so bad to be associated with that
fashion.
rear end. But anyway, you know.
Yeah.
So Dr. Pippa M, and I try to put up examples of signals all the time.
Great. So we can follow what's. You can tell us the signals that we should be watching.
And
for.
I encourage people to send me the signals they see. You know, it's interesting. Who do I trust more for information about what's happening to food prices? Our old colleagues from investment banking, all guys
or the
who
mums
say
down
there's
at the
or
supermarket?
the mums who actually go to the supermarket.
who are
I
feeding the
trust
kids.
them.
Yeah.
And I get a lot of women from around the world who send in these signals that they see.
Yeah.
So I'm trying to create a community and a dialogue around it, because it's so encouraging if you can see somebody else talk about something, then you don't feel so shy. Because people are nervous about economics. They're afraid of the subject. They think, ooh, I don't really know about that.
You know, as women, I think, and one thing I've been out there saying is, if as women we embrace this, right? I mean, I'm not saying it's a women versus men thing, but if women embrace this, it's not an area we've naturally embraced before. If we embrace this, we learn about it and we get it right and we master it, and we come together community-wise, and actually, the change we could create in this world would be phenomenal. And that's kind of what I'm passionate about, and obviously you are too. So just I think it's a great topic, and I really hope people connect with you and send you some signals.
Thank you very much.
Thank you so much for doing this interview today. I know a lot of people out there are going to get great value out of it, so thank you. And thank you everyone for watching again for another week. And remember, you can catch me later this week on my podcast, Wealth Unplugged, where I'll be giving you my key tips from my chat here with Pippa today. And you can get that on my website at energizewealth.com. So until next week, have a great week, and we'll see you then.